edition of Real Talk. We put the real in real estate. And I also have to show you that I got a real puppy and there's one barking in the background. So, Todd, welcome.
I'm honored to be a part of
Yes.
it.
All right. Well, I'm going to put Penelope down and tell Luna to take a hike. But I appreciate you being here this evening with us, Todd.
Yes,
So,
thanks for having me.
okay, now that the dogs are to the side, let's get down to business, folks. Todd, you are here because we have a fantastic topic to speak about, and that is the current landscape of the insurance market. And I think realtors would have to be hiding under a rock right now if they didn't know that that landscape has been changing here recently. So
We've got you all. We've duped you into coming to an insurance talk willingly. So
yes,
sorry about that,
absolutely.
but hopefully it'll be
No,
entertaining for you.
that's why I started it with a big fluffy puppy, and
There you go.
so it at least you can have that. But no, so Todd, we have you on tonight because obviously, as realtors, we weathered a lot of different storms in 2023, and ultimately, there's new things that are happening. Threats in our industry, and the one that is really in the forefront right now that unfortunately I don't think a lot of realtors are paying enough attention to, and that is the ever-changing landscape of the insurance market.
Hmm.
It's no stranger that we have had some major weather catastrophic losses over the past several years, and the bill is coming due. And so that's why we have you on tonight to not give us just the gloom and doom, but to give us some best practices so we can
Hmm.
still be agile, advocate for our clients because we still need to transact real estate, but we need to understand what those pitfalls are so we can be proactive in our advocacy. So, can you give us just a high level version of what's going on right now in the insurance marketplace?
Well, what's going on, generally speaking, is everybody is scrambling to stop the bleeding. All insurance
Yep.
companies in every state in the country are scrambling. And by scrambling, I mean, obviously they're raising rates, but they can't just raise rates in a lot of these markets. And especially in Texas, they have to tighten up on underwriting. And what does that mean to the consumer? That means they won't accept risks that they would even last year or the year before. They're starting to just simply not accept certain things or exclude coverages and things like that because you can't just double everyone's premium across the board and expect your business to keep going. So they're just doing everything they can to make it a viable business right now. It's the perfect storm in insurance as far as the cost of doing our business or the
Sure.
insurance company's cost. Because inflation's hitting at the same time, costs of everything is skyrocketing for all different reasons besides inflation. So
Sure.
it's just everything bad that could happen has happened. That's why you've heard of companies getting out of California. State Farm and Allstate stopped writing home policies in the entire state of California. And that was months ago. And a lot of other companies have limited what they'll take in that state and Florida and Texas. So there's a lot going on, and but there is light at the end of the tunnel, hopefully.
No, and that's what we're going to talk about today, folks, is that, we still have to transact real estate. We have to be able to help our clients, and I think the best thing that we can do is whether there are clients for a lifetime, of course, but our previous clients that have closed on homes and getting them prepared to have these conversations upon renewals and everything else. But preemptively on the home search forefront, that's really kind of what we want to focus on here in the beginning of the show, which is
Hmm.
what can we do to tighten up our standard operating procedure from the realtor side? We've got most of the time we bake in that option period to allow the buyer to do an exorbitant amount of due diligence. That's their unrestricted right to terminate for any reason. So we'll
Uh-huh.
have a general home inspection. You'll have other systems checked. Flesh out financing, do those kind of things. But now, I mean, is that something we should be doing as far as getting insurance quotes, during that period? Is that something that's advisable?
Absolutely, and I think things have kind of flip flopped a little bit on the when you're under contract. it seems like loan officers these days, mortgage loan officers can get things closed in no time. I mean,
Right.
things are moving really fast, right?
Sure.
So, but the reality is, and insurance, 2 years ago, we could get a policy together in a day. We could have a conversation
Right.
with the client and go pull all the information that we need and get a binder to the mortgage company. And now everything is flip flopped. It's taking much longer to get policies through underwriting, depending on the house and the
Sure.
client. Your standard three bedroom, two bath those are still pretty quick. We can do things like that. But
Yeah.
if you're talking about the luxury market, I'll give you an example. Today, I ran a quote outside of Farmers because I work for Farmers Insurance. Farmers has stopped taking any homes in the luxury market in DFW, well, and in Texas. They won't write anything in the luxury market, so we've had to broker those policies. And the quote I ran required pictures of the entire roof, pictures of all four sides of the house, a picture of the air conditioner, the heater, the water heater, and also they wanted a picture of the deed, and they wanted a utility bill proving ownership before they'll give me a verified quote. So you're not going to get that in an hour, and you may not
No.
get it in a day or two. It may take, and then they said the turnaround time was 15 business days for them to review it. So now that's not normal, but that is what's happening in the luxury market. And that's not every company either. That's just the company I was dealing with. And that's not the only company that has very restrictive underwriting timelines. So, for the real estate agent, I think it's vitally important to get started on the insurance ASAP. And, I wouldn't, if you're promising 7 and 14-day closings, and you're in the luxury market, by luxury, I mean, maybe, 750 and up, something
Right.
like this. You may want to add some time to that. It's fine to have a 30-day closing. It's fine.
Well, no, and I think that's right. I mean, before it was the volume was so high that we couldn't do very aggressive timelines from the
Mm-hmm.
lending perspective. Now the lenders are fine with trying to turn things
Yeah.
around. They might not have as much to do at the very moment,
Right.
but we still have to budget for that. And I think going through the option period with, first things first, great, we're executed. Okay, let's turn around. Let's schedule the inspection in tandem. I need you to get with your insurance agent. If you do not have one, I have a plethora of people I can refer you to,
Right.
and you need to work on an insurance quote ASAP. We talked in our pre-show that I had a unique situation here that closed last month, and that was a historical home that was built in the year 1900.
Mm.
And so I'm sitting here, and I knew that was going to be challenging, and I advised my client
Mm-hmm.
that way early on that we need to be assessing that. And again, there is an insurability factor to our home and to our contracts, but there's also a payment shock, a premium shock to that, and that's why we
Yeah.
need to do it on the forefront of our option period. But anywho, it had the original 120-year roof on it that was metal. And we had a wonderful roofing company go out there. That's a staple in our industry. And they were
Mm-hmm.
like, can't believe we're saying this, but it looks fantastic. And I think it's got 120 years left in it. Which led me to a whole nother trailing of thoughts that composition shingles it's a racket.
Yeah.
You know,
Yeah. They're
but
designed to wear out, I think.
yeah, no,
Mm-hmm.
absolutely. But the flip of that was I knew it still was going to be challenging. And what we kept on coming up was that's the exception, not the rule. And most insurance carriers were
Totally.
sitting there and saying, hey, that's great that it's got another 120 years. We don't like it. Denied.
Right.
We don't want to play.
Yeah.
And that was the difference maker. And eventually we were able to get, one policy enacted. Since then, we closed and the carrier came back and said, you got 2 weeks before we cancel the policy because now we want more information from the information that you provided during the
Right.
transaction. And that's just, I mean, obviously that's the unicorn of it. We're not transacting 1900-year-old homes,
Mm-hmm.
your built homes on a daily basis, but we are seeing some interesting, inventory in
Yeah.
this marketplace. So, luxury space, which 750 wouldn't necessarily have been luxury before, but obviously that's something that we need to quantify. So let's go on something else. Are you seeing on the other end, what is this doing to approval? You guys work with a lot of lenders, right? I mean,
Mm-hmm.
lenders are your go-to partners on
Yeah.
that. You work in tandem together.
Mm-hmm.
Are you guys seeing a lot of deals bust because the qualification, that the numbers no longer work because of the insurance quotes?
Well, we constantly have to be communicating with the lenders about the true cost of insurance these days because it just ain't 2,000 a year or 3,000 a year for these policies. I mean, 5,000 a year was unheard of a few years back, and now it's very normal. I mean, it's every day we see $5,000 a year policies for various different types of properties. And in the luxury market, I mean, I've sold a couple of policies that were $15,000 and $20,000 a year in the past 3 months, and that was with a 2% deductible. I mean, it was unbelievable. The price, the coverage was great, but it is. I've just never seen these premiums before. So yes, we have seen. We've we've had a lot of discussions with lenders that say, "Hey, man, I got to have this price on the insurance, or we're not going to close." And we do everything we can to get that price down, at least for closing. It's always a dicey proposition, but we can usually figure out a solution to get the deal closed and make sure the client understands what's going on, so they don't have a shock afterwards. Because that's another thing that I think as a real estate agent, you got to understand the insurance agent. We're the only ones that talk to the client continually after the closing. We talk to
Right.
them a lot. I mean, through they contact us once or twice a year because of changes or questions or any number of things can get them to call us. And like you just described, the worst thing can happen is you get through a closing and then they find out that they're going to have to fix everything that's wrong with this house in 30 days. Not, we don't have time to save for all these repairs. We got to do it now, or we're not going to have insurance. I mean, that's just it's something that the insurance agent can help everybody with. So, but yeah, on the loan side, I think as an agent, just you don't have to be a lender, but you should understand the finances, even maybe a little more deeply these days than in the past. I mean, really understand, if we're stretching too far on this home,
Yeah.
because if you come back and find out the insurance policy is $8,000 a year, that could kill your deal. And that's the worst thing that can happen, is to go under contract and not close.
Well, and I know, like, guys, no matter how much you put blinders on during a transaction, like the reality of it will come true. And I think,
Mm-hmm.
as lenders, I mean, when they say, "Hey, you know what? They look good. The ratios are tight." Oh my gosh, that would be like my antennas going up. Ratios are tight. We gotta call.
Yeah.
Let's call Todd. Let's call
Mm-hmm.
Todd's team and see if we can understand what this is going to do
Right.
to that. So, but you mentioned something that I want to go back to, and that's when you said repairs. Because obviously when we're negotiating repairs on the front end of a transaction before we close, we're looking at the things a lot of times, major systems. Maybe there's a glaring cosmetic deficiency that needs to be taken
Mm-hmm.
to consideration, but a lot of times we're not paying attention to overgrown shrubs, tree branches, debris in the backyard, things like that. And at least it's been my personal experience here in the last year, when clients are calling and saying, "Hey," they're saying, "Now that I have to do all these things, they came and did a site inspection." What are those the typical things? Are there other things that you're seeing that homeowners are having to cure, post closing, that maybe was a little bit of a surprise?
Well, we try to avoid post-closing problems at all costs.
Awesome.
I try to tell the ugly truth during the option period so that we can stop this club. Because if it's a post-closing problem, it's a big problem for the client, for the buyer,
Okay.
and they've just spent all their money closing on a house. So we try to avoid those. But the hot button these days, and I'm sure everybody knows this or has heard this, is the trees around the house. For insurance companies, they are just they're really cracking down on mature trees that are close to the house, and everybody knows what I mean. I mean, I live in East Dallas, and there is some big old trees 1 foot from the house, that are 40
Yep.
feet tall, And no insurance company is going to write that anymore. They're just not. The tree has to be removed. Farmer's rule in particular is it's got to be 5 feet from the house, the trunk. Okay. Well, that's reasonable. But the branches have to be cut. They can't be hanging over the house. And Farmers isn't the only company that's doing this. All the companies have some kind of restriction on trees and what they'll take. And and even crepe myrtle, decorative crepe myrtles we've been fighting with underwriting about that, because they're right next to the house in many cases. Nope, you got to cut all that stuff back. That's too close to the foundation, and a windstorm could blow that. I mean, we're having to have those types of conversations. And so trees is a big one. If as a realtor, if you're walking up to a house and there's any kind of lack of homeowner pride, I guess that's the way the insurance company puts it, it's going to be a problem.
Thank you for soft selling that, Todd.
I mean, chipped paint is a big no-no for insurance companies. You got it, because that's just where water can come in. Any kind of peeling, shingles, anything like that, you just got to get it addressed up front, because we're going to look at the house and we're going to look at your listing pictures, and we may drive by the house and say, yeah, we just can't write a policy on this until these things are fixed. And there's no more, hey, we'll give you a discount and then you can fix it on your. That's not, because we can't write a policy, because our company is going to come by. And a lot of times we're issuing these policies 2 weeks before closing. So the inspection the insurance company performs happens before closing, and they cancel the policy before closing because the house doesn't meet maintenance guidelines, or whatever it's called in that company. So again, we try to tell the ugly truth. That's our job, really, in my agency. I say our job is to apologize up front and apologize and back, and then tell the ugly truth, and then apologize some more, but then also offer the solution. There is always a path to closing.
Well, and I think that's where obviously realtors come into play, that we are that front line of communication. And I always say it's the takeaway effect. If I don't communicate something that has a negative impact, regardless if it's right or not, and they find out later, it's the takeaway effect, even if it's not my fault or my problem. But if I'm not educating my clients with, hey, not only do we have to look at, the price of the home, the taxing entities of the home, because taxes are going up, but now we have to really look at insurability and the cost of insurance for the property. And what I would like you to do, Mr. or Mrs. Buyer, is, you know what, call Todd's team, because I know this house has been on the market a couple of months. We have a little bit of time. Let's float this house, possibly. I know you love the trees. I know you love the area. I know that's what you love about it. But before we sit there and go all in, let's talk about whether you can get insurance upfront, and what really honestly looks the landscape down the road. That would be heart-wrenching for somebody to buy a house because of these beautiful trees, and then all of a sudden, to maintain insurance, they have to cut them all down. And that's something. Yeah, it's awful. But as realtors, we have to take ownership and accountability. We're not the insurance industry. But the last thing that I want my clients to do is have this heartbreaking experience after they buy their dream home. And so I think that's huge. Hey, I'd be remiss if I said we didn't have some fans, at least, that are chiming in. And so we've got Shanae, who said, good evening, Ashley and Todd. Shanae, you are a rock star, and thank you for joining us again. And Todd, we were talking about Bill Jordan offline earlier. We've got Bill Jordan with us this evening.
All right.
Yes. And then, of course, Matt Bird, two of the best in the industry. Right back at you, buddy.
Right back at you. That's right.
I did hear that you also sound funny right now. And if anybody has listened to me in the past, I do not sound like a raspy lounge singer, naturally. This is... Got to
lay off those cigarettes.
I do, exactly. Change my name to Maybelline, all right?
Yeah.
So, yes. But no, I appreciate it. And of course, Francie Beal, of course, she had to be funny. Cracking down as an operative word there when we were talking about trees. To crack down. I see what you did there, Francie. So let's go into some other things that we need to talk about. And that's the progression of the roofing, or not roofing. Yeah, that was a Freudian slip. Progression of the insurance industry, as far as what insurance coverage kind of looked at once, and now over the past 40 years or so, how it's kind of progressed into other layers of coverage.
Well, I gave a talk to the Dallas Mortgage Bankers Association the other day, and that was a lively bunch. And no, they're awesome. That's an awesome organization. And in my research for that talk, I just kind of looked at what insurance was in the distant past and what it's kind of progressed into. And I think you would all laugh if you heard me say, you've never had it better from a coverage standpoint with your insurance. You've never had it better.
Yeah.
And that is the truth, because insurance right now today with all companies pays for more things, pays for more stuff than it ever has. And as an example, in the 60s and 70s, it was a fire policy. That was what it was called, because it was to cover you from fires. And that's it. There wasn't anything else. And then they said, oh, well, maybe we should also cover water. Let's cover water leaks when your lead pipes break. And in the 80s, they said, well, wait a minute, we've just been covering the loan amount on the mortgage. Why don't we do a reconstruction estimate? So they started in the 80s and 90s doing reconstruction estimates. And why would we cover it for $1 million if it's a 2,000 square foot wood frame house? Wouldn't take $1 million to cover it. Let's cover it for whatever it costs, 400,000. So they started doing that in the 80s. In the 90s, they started adding full replacement cost, retail coverage, retail value coverage to your insurance policy. That wasn't a thing back in the old days. So as time has progressed, insurance has added more and more and more bells and whistles to the policy. And I'll give you a great example of how that's coming back to bite us. We had a client just call in out of the blue to our agency about 3 months ago, and he was with Nationwide. And he must have had an awesome policy. He had a big old house. It was almost 5,000 square feet. And he was being non-renewed by Nationwide. They're going to cancel his policy on renewal. And the reason was because of too many claims. And, also Nationwide is in massive financial trouble. So that could have something to do with it. But we looked at his claim. He's like, I can't get a policy anywhere. And we quoted him, and he had a claim for a microwave repair for his built-in microwave in his kitchen. And then the year before, he had a dishwasher repair paid for by insurance. And in that same year, he also had a weather claim. So he had these two, in insurance, we'll take a weather claim and we'll take a water claim, but we won't take anything else. And so he's got two of those anything else claims within 3 years. They're non-renewing him, and no one is going to write him a policy. Literally, he called us back twice. We did quotes in 2 different companies. This house was too big for farmers. We quoted in other companies. They wouldn't take him. And he was going to have force-placed insurance by the mortgage company, because that was the only option. There wasn't, and everybody knows force-placed insurance is double the price of everything. And it's coverage too. It's just bare bones coverage. So that is a perfect example of how not to use insurance. Insurance is for catastrophes. That's what it should be for. Now, that doesn't mean you should never use your insurance. You're paying a lot of premium for your insurance, but people need to understand that, making those types of claims raises everyone's rates unnecessarily. It's not, it should be to protect you from financial ruin, not from broken glass in your front window because Billy threw a baseball through your front window. That's not what insurance is for. Although there is an endorsement for that. That will pay for that.
Is that called the Billy endorsement?
It should be. It's an endorsement, and it has no deductible for glass only claims on your house, and all companies offer it. And you can put it on there, and if you use it, you won't be able to buy insurance from another carrier for 3 to 5 years afterwards. So it's just there's all these things that insurance companies do to make their policy look great. And when you pull the curtain back, all the companies have all the same bells and whistles. I have everything you've ever seen on a television commercial. I can write you. It's just not worth it to. It raises the price of your policy, and then if you use it, you're stuck. You're stuck for years, and whatever the price is, that's what you got to pay. And so, as advisors, I'm not in the business of sending clients away, but I want to tell my clients, what is going to happen if they make this or that claim. If it's a weather claim, obviously you make the claim.
Sure.
That's what your insurance is for. But if it's a microwave repair, maybe you ought to come out of pocket for it and not put that on your claims record. So and again, I always say I'm free with the policy. You get me free. You can just call me and say, hey, should I do this or shouldn't I? And we can talk about it. If you have a 1-800 number, if you do that, they'll open a claim and then talk about it with you. And you'll have a claim that paid $0 on your record. So use an agent. Agents are free with their policies.
Hey, no, I mean, it's the same thing. We're talking about value propositions, right? With real estate agents, insurance agents,
right.
everything else. There is a position of, just advisory
right.
roles that I know aligning ourselves with people like your agency, Todd, is huge. Here's the other thing. I was sitting there going, oh my gosh, my insurance has increased so much. I haven't had a claim in years. My auto insurance went up, all of these things. And I kept on meaning to call Matt at your office to say, Matt, help me, because this is eating me alive. And then by the time I was actually going to get around to it, because realtors are not proactive in their own business, Matt called me or texted me and he was like, hey, found a better policy. It's going to cut your car insurance in half. Can I do it for you? I'm like, well, yeah, absolutely. So
yeah.
I didn't even have to pick up the phone. Matt automatically was able to find me, half the cost of the same coverage. And that's the other thing too. I wasn't willing to go find the cheapest product. I just still wanted a robust product. I just needed to find a more affordable solution. And so I think people need to have those conversations with their trusted agents on some of those things. Let's go to deductibles though.
Yeah.
Because that's another thing that you guys can advise on accordingly. And I love this is probably not something you want to hear. I love to play Russian roulette with my deductible in the past. And so 1%, 2%, where are we going to go? But it was like, what is hail season this year? What does the weather patterns look like, right? But I think gone are the days of that 1% wind and hail, if I'm not correct, right?
There's still a few companies that will do it, but yes, they are going away. And if you ask anyone in insurance right now, especially in Texas, they're probably going to tell you, 2% wind and hail is going to be the norm. And in dollars, that means if you got a $750,000 policy, that's a $15,000 deductible for wind and hail. It'll eventually go that way. And a lot of companies are just, even if they can't offer 1%, the premium is so high that they're just showing people 2% so that they know what is available to buy. But not only that, but replacement cost coverage on roofs will probably be gone in 5 years. No one will offer it, no matter what the age of the roof. You'll be on a schedule, which means they'll pay, if the roof's brand new and it gets totaled, they'll pay 100%. If it's 1 year old, they'll pay 97%. And it just goes down and down as the roof gets older. And that's probably what's coming. And that's available now. You can buy that coverage now. And it does save you quite a bit of money. You just have to understand how that schedule works and what it actually means to the amount of money you're going to get at claim time.
So it's really interesting, Todd, because this is something that I've, a business mind right over here. When you're sitting there and going, where's the opportunity? We have a lot of threats. And where's the opportunity? And I really look at the roofing industry because, the roofing portion of insurance is probably where we see, the majority of claims, if I'm not speaking out of turn, correct?
No, absolutely.
Yeah. And so I sit there and I go, okay, one, the roofing industry is not regulated in our great state of Texas, which I know we're working on to try to see if we can get some increased regulation there, which basically means it's kind of cowboy up, right? I mean, people can go out there and charge per shingle what they want and all of those other things.
Yep.
And so at the same time, I likened it to, I talk to my clients and I go, look, all right, roofing cover, deductibles are looking different. There's all these things that are looking different. I don't sit there and I go, I don't expect you guys to cover my HVAC system. That's something that is absolutely precluded
Hmm.
from the majority of insurance policies. I'm not going to take, I'm not going to say there's not something out there that precludes something from being covered, but
Hmm.
it's one of those things where we have to talk to our clients and say, hey, that's a large replacement cost, and you guys need to budget for that. But what's happened is those AC companies have figured out other ways to be able to replace units for people that can't do that out of pocket, and so they've
Hmm.
found affordable financing options, payment plans, doing different things like that. And
Hmm.
I think that's something that if a roofing company was really proactive right now and not reactive, they would look at different business models and being able to potentially, find financing options for replacement of roofs. Because if I'm going to have to go there and all of a sudden my insurance premium is $6,000 a year, my deductible is 2 to 3%, my housing
Yeah.
price is continuing to go up, year after year, and I'm going to have to sit there and pay $20,000 for a deductible for my home. I'd
Right.
much rather lower my insurance premium to half of that. And when the day comes that I do have to replace my roof because it's truly not functioning, not because of cosmetic hail,
That's right.
um, right, that I have the ability to turn around and spread that through maybe a 2-year period of financing that brand new roof that is now failing on me.
I
Is
think it's a
I
great
mean,
idea. Yeah. I mean, and I'm actually surprised. Like I'm thinking while you're talking, and I don't know of any time where I've seen, 0% financing for 24 months on a roof from a roofer. I mean, we've heard that, yeah, like you said, from the AC companies, and maybe that has to do with lending underwriting in that space, but it seems like such an opportunity, especially in weather-prone areas like ours. I mean, North Texas
yeah,
is primed for that, and Oklahoma for that matter is just primed for that type of product. Everybody would use it, and it seems like they would, everyone would be happier if they could borrow the money cheaply to replace her. And these roofs, I mean, this is something, it leads to a thought I had about, if you're an agent and you're showing a house, there's a lot of these homes up north of the Metroplex that have these super complex roofs. And when you
mhm,
see all these gables and all these angles on the roofs, that's just money. And if that roof needs to be replaced, that roof is going to be very expensive to insure.
yeah,
Like I have a 2-story house, but it's kind of in a small space and the roof isn't very big. And we actually had to replace the roof on my house recently, and it really wasn't that expensive, relatively speaking. But these big houses with these massively complex roofs, the square footage might be identical to my house, but I guarantee the roof would cost 3 times the price to replace. So having some financing like that would be amazing. I mean, we should work on that. I'm gonna make some calls right after
Todd,
this.
offline. I know. Hey, listen, you heard it first here. I've got. We're gonna
Yeah,
we're gonna strat plan after this and see
I
if we
like
can
it.
figure something out. Well, because in my thought process, it is that wind and hail deductible. There's other parts of your premium that you take into effect, but it's that wind and hail deductible. If you could say, because what is that threshold? Because I think a lot of people don't understand that you can increase that deductible threshold. So what can you go up to?
We can write up to 5%. So, and in our agency, we don't like throwing the percentages around. We always talk in
Yeah,
terms of dollars
dollars.
because no one, you can say 2% to somebody all day long and it just doesn't have any impact. When you
Yeah,
tell them that's 2% of your $800,000 coverage, that's $16,000 before insurance pays a dime.
yeah,
Do you understand? It's 16,000 out of your pocket, and then insurance will cover the rest. Does that make sense? We
yeah.
say, "Does that make sense?" a lot in my agency. Does that make sense? And they have to say yes, yes. So we know that they heard what we said. So I think if people are willing, if they're good at saving money and they're willing to absorb that risk, they'll save a ton on their insurance. I mean, and the deductible only affects you when you make a claim. So,
Yeah.
in the meantime, if you're saving all this money on your premium, which these days it's going to make a massive difference, taking a 2% deductible is going to make a huge difference in your home insurance premium. So it's definitely something people should consider.
Well, and I think those are the things. I mean, like, look, no good thoughts come, without having these kind of conversations and
Hmm.
those good ideas. And so I think that is something that because housing makes the world go round.
Hmm.
and ultimately roofers and other people in our industry, they have to be forward thinking that if these are the challenges and these are the pitfalls, what a great market share opportunity to be able to provide solutions and then be able to partner with people like you guys to be able to
Hmm.
say, hey, we can save you money on insurance premiums by having increased, deductibles. And we do it on health insurance. I mean, that's something that people, they're just more well versed on
Yeah.
that side. But we have to kind of take that same thought process, I think, into the homeowners insurance space, to sit there and qualify that. There's something else that we talked about. It's very interesting that and this again is in the health insurance or medical space,
Hmm.
cash pay and the cost to bill through insurance in both the medical space and the homeowners insurance space, or
Hmm.
specifically the roofing space, looks very different. So I think that's something that we're also seeing people kind of take advantage of, and now is causing a big disadvantage, which is if you were to pay for your roof out of pocket with a roofer, would that look different than what that roofer bills to the insurance company?
There's no question. It would be
Yeah.
less expensive if you pay. And I know this firsthand because I replaced a roof on my last house it was years and years ago, and my roof was hammered, and I knew it. And it wasn't weather that hammered it; it was age. I
Yeah.
mean, it had lost so many granules that it was
Yes.
like shiny when the sun shined on it. Like it was just tar up there. And I'm
Yeah.
like, I'm not even gonna try to make a claim. And I'm in insurance at this time, and so I called a roofer and he gave me a quote and he went up there and said, man, I think I can get this roof bought for you by the insurance company. I said, okay, well, let's make a claim. All I can say is no. And he did. And he quoted me one price, and then insurance paid out probably 40% more than what he quoted me to replace my roof. And that happens in health insurance all the time. So, which is something that we should, all of us, sidebar, we should all question the price of everything. There should be one price for everything,
Yeah.
regardless of who's paying for it. And it should be the best price.
Yeah, no, absolutely. And again, I mean, it's hard because there are a lot of different industries that become predatory because, hey, if people see dollars, it's a
Yeah.
quick buck, and they're doing that. The roofing industry following catastrophic. Yes, I know, Sherry Fearbacher, my lovely mother. Question everything. Um, yes, I don't know where I got it from, Todd. So yes, but I mean, it's one of those things where people are seeing opportunity and seeing that predatory nature and being able
Yeah.
to find people at their lowest or at the scariest time when they're having to deal with something is horrible. But I
Hmm.
think as an industry, when we talk about powers and numbers and power numbers, the real estate industry, everybody can demonize us for being a big number, but gosh, there is a voice behind as many people as we are, and the amount
Hmm.
of people that can advocate for these different things, not just for home ownership, better legislation, better, property tax policy, but gosh, we can advocate for property taxes all day long, but replacing the roof is more expensive than your property tax bill,
Yeah.
you
It can be
know?
very
And
expensive.
no, it is. And so it's one of those things you're talking about in the back of your head going, I need to talk to some roofers because this would be
I
a great
know.
business model. In the back of my head, I'm going, I need to talk to some of our legislative partners, and I need to talk to them about, what we're talking about property tax reform. What about roofing legislation? What about talking about what we can do, in this capacity? And what can we do with, being a group of numbers to sit there and say, this needs some reform and we need to
Yeah.
figure it out because
We just need
we
to
talk about all
standardize
the
it.
time. Yeah,
Hmm.
we just need to standardize it because we always talk about everybody needs a roof over their head. Well, if you can't get a freaking roof or pay for it, then we're taking away the one thing that people need. And
Yeah.
so, I think it's an education piece. And I love that people are chiming in,
Hmm.
about, yes, this is absolutely crazy, Shanae.
Hmm.
Libby said it's great information. This is information and dialogue that people aren't talking about because it is uncomfortable, Todd,
Hmm.
and it could break a deal. But I got to tell you, I like to have clients for a lifetime, not for a transaction. And if I can be the one that kind of breaks their hearts initially and says, I know you love this house. I think it's beautiful. But ultimately, at the end of the day, I need you to talk to Todd's team, and I need you to understand what this looks like in the short term and potentially in the
Mm-hmm.
long term for insurability, because that changes your family being happy here. Do you not think I garner all of this emotional capital and trust with my clients being able to have that, which is what you guys are doing.
Mm-hmm.
You're being the bearer of bad news and saying, I want to write a policy, but do not do this.
Yeah.
So it's very different. So anywho, I mean, I think, going into the last portion of this evening's show, I want to touch a little bit more on leasebacks. That's something that we talked about before. We also
Mm-hmm.
did it when we did our catastrophic loss segment after Ice Mageddon, which was
Everybody's favorite. Yeah. Everybody's favorite topic.
everybody's favorite. You look back and you're like, man, that seems so long ago.
Mm-hmm.
But it really wasn't, and that's what we're reaping now. But leasebacks were a big portion of that conversation because that was a very aggressive seller's market at that time. And we were seeing very
Mm-hmm.
long-term leasebacks given to the sellers. And there was a lot of impact that we saw during that time period. But now, because the insurance landscape has changed, considerably, you and I were dialoguing about what that temporary residential leaseback looked like.
Mm-hmm.
Primarily, we see that a lot for sellers, which means they can close on the property, they can lease it back from the new homeowner for an indiscriminate amount of time, and everything's fine, right? Gives everybody a little bit of breathing room. Um, but there's a responsibility factor in that lease back, and
Mm-hmm.
it's a little bit ambiguous when you and I were reading it together.
Yeah. Mm-hmm.
And you kind of taught me something, which I will say doesn't happen often, but you learned me, which was, Ashley, I don't care what your document says. What the insurance company is willing to cover is the end all be all. So really talking about in specifics that document talks about, yes, consulting your insurance company as far as what the proper coverage is for both parties
Yeah.
in that.
Mm-hmm.
But I kind of thought about the insurance was with the property, not as much as with the owner. And that was not immature thinking, but it was just because we're talking about it in the terms of the leaseback.
Yeah.
And you were like, you are absolutely wrong. You need to
I
stop.
didn't say that exactly,
I
but
know, but that's what you gingerly were saying to me, and you were absolutely right. It doesn't matter what your contract says. It talks about what the insurance company ultimately is going to cover in that capacity. So let's start to kind of
Mhm.
dissect on that lease back of some things that you think are challenges, questions that need to be asked. Because I told you, I was like, oh my gosh, we shouldn't do lease backs at all, and you're like, no, 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 it's still a staple, and it's still
Yeah,
something that's a tool for you guys, but you really need to sell it appropriately. So can you kind of shed some light on that just a little bit?
sure. Yeah, so I guess the first thing I'll say is when I'm dealing with insurance underwriters, the word reasonable is my guiding light. Okay, what is reasonable? So, leasebacks are reasonable. Leasebacks are a reasonable part of any real estate transaction because you simply can't plan every move around the closing date and move in the day you close. That's just not going to happen in the real world. So, and underwriters
Right.
understand that. So it's fine. But, and what you were describing to me was part of the leaseback agreement that says the seller who's going to live in the house for a few weeks after closing is going to remain responsible for anything that happens to the property. And what I was saying, I didn't say you were wrong because you're not wrong. The seller can be responsible according to your contract, but that doesn't mean insurance is going to pay for anything that happens.
Right.
Because what happens is on the day of closing, the sellers.
Sorry, Todd, that's Maybelline.
Oh, hey, we'll call her May. Oh, Mabel. The
Yes.
seller's going to cancel their insurance policy. They're not going to have. You can't just continue your homeowner's insurance policy if you don't own the house. Insurable interest is what we're talking about. You can't have a home insurance policy on a house you don't own. So what the buyer needs to do is they get their insurance policy, which starts on the day of closing, and they need to tell the the leaseback folks, the sellers, that they need to buy a renter's policy with liability insurance on it. Now, if a hailstorm hits the house a week after closing, it's the buyer's responsibility, period, according to insurance. It's the owner's responsibility. Okay, so the owner, the new buyer, they're the ones that are going to have to make a claim, even if they haven't moved in the house yet. That's the reality of the insurance. Doesn't matter what the leaseback says. If the leaseback says the seller is responsible for everything, including hail, then the seller is going to have to pay for the whole thing out of their own pocket. Insurance is not going to pay for that. Even if they didn't tell their insurance company, when the insurance company comes in and they find out that there is a leaseback in force and the sellers don't own the house anymore, they could deny the whole thing and they'd be well within their right. There'd be no, because the policy is null and void because the client doesn't own the house. They're not financially responsible for it. So I think as an agent, it's very important to understand that you can put all the responsibilities you want on either party. You just have to have either party understand that insurance is going to pay for the person that owns the house. The person that owns the house, that's the insurance policy that's going to pay regardless of who's living there. So that's the important thing to understand.
Well, and on that leaseback, it does say you should consult your your insurance provider for
Mm-hmm.
understanding of this. But that's really important because before, where insurance companies might have been slightly more laxed on what is reasonable and what is not,
Mm-hmm.
with things tightening up into the capacity in which they are. These are things that we need to be having conversations about, and so I think that's really prudent and
Mm-hmm.
important. So we've got about 15 minutes left.
Mm-hmm.
Um, it's ugly, but let's talk about the luxury space just a little bit because we touched on it just a tad with the 750 and above, and that's kind
Mm-hmm.
of what we're looking at the luxury. But look, what I want to say first before you even talk, Todd, is that there is still a need to transact and buy and sell real estate in any demographic, any marketplace, any price point, any type of construction. We just need to understand the nuances that go into this because ultimately we want to set proper realistic expectations.
Mm-hmm.
So, can you tell us a little bit of what's going on in the luxury space as far as being insured in North Texas?
Well, insurance companies are getting out of the luxury space, is what's happening. There's far fewer carriers that will even look at that policy anymore. And the limits are all over the place. I mean, some people will write up to 1.5 million in coverage, and some people won't write more than 625 in coverage. 750 is the limit. It depends on the company. We have other companies that won't write anything over 500,000 in, and I'm talking about reconstruction
Wow.
costs. I'm not talking about market value,
Yeah.
and those are two separate
Yeah.
things. But you know, I did a quote today, and it was just under $1.2 million, and it was $8,500 for the policy with a 1% deductible. So that was amazing. So there are
Yeah,
fines
that
out
is
there.
awesome.
It just depends on, and it's crazy. We're calling an $8,500 policy an awesome. Oh man, what a deal! But that's what's going on. Just having a policy in many cases is the win. And
Yeah.
you know, if you're looking at a home that's a custom home, that's a large home. We quoted one in University Park last week, and the only carrier. This is a big custom home, and it's very expensive. And the only carrier that I have access to that we quoted is Chubb Insurance, which is an awesome
Yep.
insurance company, and it's $25,000 for the policy with a 2% deductible, and it was three point something million in coverage. So that guy had a near $80,000 wind and hail deductible, and it was
Wow.
$25,000. And he's like, "Well, that's three times more than I'm paying." He was shopping. I'm like, "Oh, you're trying to save money? You're not going to save money. There's no saving money. You just need to keep what you have until they cancel it. I mean, because there is no saving money. Because, like I said, just having a carrier to offer coverage, like, and if you're buying a house, you just have to understand that if you're buying a big old mama bear house, it's gonna cost a lot for the insurance, and by a lot, I mean 5 figures and up.
Well, and I know that's really scary, and people are going, "Gosh, why are you guys even talking about this right now?" But here's the deal: interest rates obviously put a squeeze on the volume that we're transacting.
Mhm.
Insurance really honestly is not, in my opinion, going to change the volume in what we're transacting,
No.
because renewals on premiums are still going to happen. So it
Mhm.
doesn't matter if you buy a new home or you stay in your existing home, you're still going to be hit by this. It's not like it's starting fresh once you start a new policy. You guys are seeing this upon renewal on policies, correct?
Upon non-renewal is the way I would put it. We're having lots of our current clients' homes non-renew, which means the company is they're saying we're done, we're getting out of this market. So when your policy ends, we're not going to offer your renewal, which means they are forced to buy another policy. And I have a few clients in some luxury houses that are absolutely shell shocked right now because the rate with farmers was really low for what they were getting, and farmers can't raise the rate enough to make up for the risk that currently exists. So they're just like, we're done. And now we get them quotes, and the quotes are triple what they're paying. And I'm telling them, like, I get it. It's no fun. But here's a couple of companies I don't have access to that maybe you should go try to find quotes for.
Yeah.
And I've got one client in particular who I've done that with a couple of months ago, and he still hasn't found anything he's still looking for something that's close to what he's paying. And I'm telling him there isn't anything. There's nothing that's close to
Yeah.
what you're paying. It's just going to be, it's going to have to find the best worst. So,
I mean, hey, it's Todd, it's where we're at. And like you said, I
yeah.
mean, you guys are just, I mean, you're here to deliver the real news, and this is real talk, so that's appropriate, right? But ultimately, again, I don't want realtors and the people that are watching this now to panic. It's another layer from the transactional standpoint. It is another touch point that as realtors, we can be disseminating this information to our clients that, hey, as insurance renewals come up, I want you to be aware there's an ever changing landscape, things like that. You can still be the voice and you can still be at the forefront of delivering that information
Mhm.
instead of getting a letter in the mail that states we're not renewing your policy, or here's your renewal statement and it's double what you're paying. But, if Ashley Gentry is the one sending out an email, a text, a phone call, a video, and saying, hey, Todd, I just want to let you know there's a lot of things that are going on in the insurance industry right now. And I want you to be prepared that
Mhm.
upon your renewal, you guys bought the house about 8-10 months ago. You
Mhm.
guys are going to be getting your insurance renewal very soon. I don't want you to be shell shocked. So I want you to be able to proactively have these conversations with Todd and his team,
Mhm.
to see what this is potentially going to look like. At least I'm sitting there and saying, hey, I gotta tee you up and I gotta set the stage. And I think those are things that still remain to make me and the people that are listening that true trusted advocate and professional in our industry. And yes, Robin, 750 or more really considered luxury in terms of insurance. I know with our marketplace, I mean, 750 just kind of seems like almost like mid upper tier. But Todd, what do you say about that?
When I say 750, I'm not talking about market value. I'm talking
Replacement
about
value.
I'm talking about reconstruction cost. Those
Yeah.
two numbers have nothing to do with each other. So,
Okay.
the land, if you buy a house that costs eight hundred
Sure.
thousand dollars, the land is worth 300,000 or more,
Sure.
depending on where it is. So, we're talking 750 and up in reconstruction costs. So, these days, 200 to $250 a square foot in replacement cost is kind of for the average replacement cost. When you get into the luxury market, you're looking at $400,
Yeah.
$500 a square foot for an insurance company to rebuild that house. There was a question about builders earlier. Builders get way better rates than insurance companies on materials because they buy in bulk. Insurance
Yeah.
companies build one-off custom houses when they have to rebuild a house. So they buy materials for a one-off custom house, and they don't get it. They're not getting a bulk discount because they're not buying a truckload of whatever
Yeah.
the materials are. It just costs the insurance company more to do those things. So that it's just, there's a lot of that's a good example of a lot of the confusion around these numbers.
Yeah.
Insurance is nothing to do with market value. It's only reconstruction cost.
So going into the last 5 minutes, let's kind of talk about, very, quickly why we're in this space. It's not just because of inflation necessarily. It's because of the losses, and that insurance, I think we kind of take for granted sometimes, like, this is not a charity.
Yeah.
Insurance companies are not charities. They are businesses. This is a different business model. Just like realtors don't work for free, even though we're advocating, having to advocate for that. But at the same time, there have been catastrophic losses. Insurance companies have not been posting profits. I mean, and not just profits, they've been posting like billion-dollar losses.
Yeah.
So can you give us an idea? Is there hope at the end of the tunnel? Is what we're going through right now a course correction to get us on the other side?
I think we're in the worst of it right now. And I think the first 6 months of 2024 is going to continue to be the worst of it. And things are going to really start to turn around, later on down the road, maybe closer to 2025. And things are turning around depending on the market you're talking about. I mean, State Farm is I think they posted the first 2 quarters of this year, 6.6 billion in underwriting loss in 6 months. So, and they're the largest insurance company in the country, but the story is the same with everybody. You've heard Farmers laid off 2,400 people. Geico laid off 2,000 people. Well, Geico's positive now. They are profitable right now and they just sell auto. Geico is only an auto insurance company.
Right.
And auto is a whole other, we'll have to have a whole other real talk on auto, but they're making money, Progressive's making money, and other companies were making all these changes. So the tide's kind of turning. It just takes months and months to kind of see the results of the underwriting tightening. So I think, later part of next year, we'll really start to see some, at least consistency in premiums. Right now, it's like, well, can you write this, or what's a good deal these days? Who knows? We got to throw it at the wall and see if it sticks. I mean, that's literally what it feels like on a day-to-day basis. So I think we are in the worst of it right now. And I think we're gonna, if everyone can just keep their heads above water, to the middle of the year, I think we're going to at least see some, just stability will be, will ease the pressure on everybody if we can just get some stability.
Well, I appreciate going through this powder keg experience all at the same time with the market conditions, interest rates, insurance, everything else. At least if we come out on the other side, it's a reprieve from all sides. But I think that's important to note, Todd, giving people that context and to know that all of this course correction is so that we can get to a stabilization and then a better modeling going forward on these premiums. The last thing I would just kind of want to dispel as far as, a myth or a rumor is the fact that if you don't make any claims, you're impervious to these conditions. And Todd, I'll let you kind of answer that. Is that truly the case?
No, it's not. Unfortunately, we've all got our bathing suits on and we're swimming in the same risk pool. And that's what it is. It's a pool of risk. No one's on an island. When an area is affected adversely, everyone in the area pays for it to some degree. Now, people who make more claims pay more, but there's just no way around it. If the insurance company wants to continue to do business in an area, they have to charge the premium, and they have a whole team of product people that do nothing but look at the cost of everything and determine how much it costs to sell this risk. Insurance is such a backwards business, because you're like, everyone in the world, like, sell more, and that'll solve all our problems. Well, that's not the case in insurance. If you sell more, you're adding risk that you're going to have to pay for, and potentially, and if you do it wrong, you'll lose your company. So it's one of those things where everyone has to bear the burden, unfortunately, of claims paid in an area, even if they didn't make one.
So, but here's what I will leave people with. That doesn't mean to go make a claim, because you can be non-renewed your premiums can go up exponentially.
Right.
So you still need to be conservative. We're going to look at some new business models, call a few roofers, I
That's
think,
right.
Todd. But is there anything you want to leave our viewership with this evening?
Well, all I do is talk doom and gloom all day long, and I don't want you to think that I'm that guy that just is negative
No.
Nancy all the time. Our job is to apologize for what's going on and then find a solution. And there's 99% of the time there's a solution, and it's
Yeah.
really good sometimes, and sometimes it's not. But the thing about insurance, I want everybody to understand, is it's always moving, it's always changing, and lately it's changing week to week. So whatever the situation is right now, if you keep in contact with folks like us, the folks on my team, we can work through problems over time to get you where you need to be. There's always a solution, and that's what our goal is to find a solution for every situation.
Well, Todd, I appreciate you coming on this evening. I appreciate our audience listening to my voice. I'm glad it prevailed, but I am so appreciative that you've been able to educate our audience. And, what I would implore everybody to do on here is share this real talk with people, because I know there are a considerable amount of realtors in our industry that don't understand what's truly going on, because volume has decreased in
Mhm.
transacting real estate right now. So they might not be aware of all of this, but it's crucial and it's important. And it allows us to continue to be in the forefront of the minds of our current, previous, and future clients. Todd, you guys do a great job at the Todd Campbell Agency.
Thank you.
And thank you for taking the time this evening. And guys, if you want more information, like Todd said, him and his team, they're there to be advisors, counselors, and
Mhm.
whatever else it is, just like we are as realtors. So reach out to them, and we appreciate that, Todd. We welcome to have you back, maybe towards the middle or end of the year in 2024, to talk about how it's recalibrated.
Some good news. Yes, yes. Thank you so
Yes.
much for letting me come on here. I really appreciate the opportunity to talk to everybody.
All right, guys. Well, have a wonderful evening and a very Merry Christmas, as this is the last Real Talk of 2023. I can't believe I'm even saying that we're almost done with 2023. We'll see you in 2024. And thank you, Todd, for helping us put the real in real talk and real
Thank
estate this
you.
evening.